we've made a number of changes at Real Money, and one that I'm most proud of is a new diarist, James Gentile. What does a diarist do? A diarist gives you a running commentary of how to be better, how to figure out what to do. We can write all we want about, journalistically, about the markets, but someone who's in the trenches, who's making the decisions, I find is far more valuable, and it's something that we pioneered at TheStreet and pioneered at Real Money. And James is just a fabulous addition. I read him the moment he comes out. Why? Because he's thoughtful about what is going on. And that's why I want to introduce you to him on video now. James Gentile. James, great to see you.
Thanks, Jim. Pleasure.
I just want to apropos of what you do, fabulous pieces about, say, exposure. That's a term that a lot of people use in trading that a lot of people in Real Money should know about. You talk about exposure in these wild markets and give us a sense of what needs to be done. Let's use that as a metaphor of getting into the kind of things that you're doing for Real Money that are so special.
Sure. Well, part of the reason why Real Money is an attractive tool for investors and traders alike is that we, as contributors to the Real Money, really try to articulate appropriate portfolio structure, appropriate trading process, and one of those tools is exposure.
Maybe this is an opportunity for people to take a little off the table rather than pile on at these levels.
Well, one of the things that you'll see consistently in my work, especially since I'm a new contributor over the last 6 weeks, is I really like to buy low and sell high. It's that simple. And right now I think we're on some perch where we're going to start seeing second half expectations which are hopeful by Wall Street analysts that may not necessarily come to fruition. We're having a very difficult and slow growth environment right now.
So let's step back because we talk about the notion of what you're showing people, but it comes from the basis of tremendous experience that you've had over a long period of time.
That's right. Well, I haven't been on this floor of the New York Stock Exchange since 1986. My grandmother was a bond trader at Merrill Lynch, and I was lucky enough to be here. But what it comes down to is that the reason why I'm here is because I love stocks, and I love trading, and I love investing.
You are not a trader per se in the sense that what you do is you look at charts. You may be some technical now, but what you're really doing is you're sitting there going to conferences, listening to companies. Give us an example of a small cap stock, because I know you loved the, you kind of like the allure of small and medium.
Absolutely.
So talk about what it means to be in this environment where those stocks finally making a comeback, but maybe on very little volume.
Right. Well, what it comes down to is when you're seeing lifts on more illiquid stocks, you really should take the opportunity to lighten up. This is a situation, folks, where volume is light, and what we're seeing is such a disparity in the market between the hyper-growth large and upper mid-cap names versus the smaller cap names, which are effectively left for dead.
And, There's give no us a couple examples of these names.
A couple of examples that are very attractive right now that seem to be under folks' radar screen. A company called Lindsay Manufacturing, which makes water infrastructure, road infrastructure, center pivot irrigation systems. Those are the big circles that you see as you're flying over the Midwest.
Residual ag play that people should be thinking about.
A residual ag play. As you know, I was positive on Deere after the company was
and everyone else was negative. It's important to try to remember, if you're at home and you're trying to figure out some of these bizarre moves where you see worse than expected and a stock goes higher, you should read James, because James is about the psychology of it, but also about the insight of what are the key metrics that are really driving a stock as opposed to what the headlines say.
That's
the headlines
exactly right.
are almost generated by machine.
That's right.
A lot of these places that write these headlines can't afford to have real journalists anymore. Nope. So what they're doing is they're just looking at what the consensus would be, saying it's worse than says, and therefore sell. That's not the game you play.
No, absolutely. In fact, I'm quite a contrarian if you think about it. Again, I like to find under the radar screen opportunities where the herd is not participating in, and where I like to lighten up is, or where I'm hopeful that I've accumulated an asset on the cheap, and the herd will then follow me there, and I like to sell it. I call it feeding the ducks.
I like that. One last thing, you're rewriting every day, several times.
Yes.
And just
getting my feet wet. I'm a daily contributor to Real Money. And I'm very much having fun. I've been interacting with many of you through Twitter and also over email at Gentile Real Money. And I look forward to continuing my participation.
It's a pleasure to have you. And like I said, Real Money just gets better and better. Thank you, Jason.
Pleasure.